Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into the latest earnings report from CooperCompanies, a leading global medical device company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. CooperCompanies has just released their fourth quarter and full year 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. CooperCompanies reported a fourth quarter revenue of $1,065.2 million, marking a 5% increase. For the full fiscal year 2025, revenue reached $4.1 billion, also up 5%. John, what are your thoughts on these figures?
These numbers are quite impressive, especially considering the organic growth of 3% for the quarter and 4% for the year. The company has managed to grow despite currency headwinds and other challenges. Their non-GAAP EPS for the quarter was $1.15, which is an 11% increase, and for the full year, it was $4.13, up 12%. This indicates strong operational performance and effective cost management.
Operational efficiencies and future outlook. Despite the revenue growth, we see a decline in gross and operating margins for the quarter. The gross margin was 61%, down from 67% last year, and the operating margin was 13%, down from 19%. Can you explain this, John?
The decline in margins is primarily due to costs associated with reorganization activities. However, on a non-GAAP basis, the operating margin actually improved by 110 basis points to 27%, thanks to operating expense leverage. Looking ahead, CooperCompanies has provided a strong guidance for 2026, with expected revenue between $4.299 billion and $4.338 billion, and non-GAAP EPS between $4.45 and $4.60. This reflects their confidence in continued growth and profitability improvements.
Strategic initiatives and shareholder returns. CooperCompanies has been active in returning value to shareholders. They repurchased $197.3 million of common stock in the fourth quarter. What does this indicate about their strategy?
This is a clear indication of their commitment to enhancing shareholder value. The company has expanded its share repurchase program by $1 billion, with nearly $1 billion still available. Additionally, the reorganization efforts are expected to yield $50 million in annual pre-tax savings starting in fiscal 2026, which will further support their free cash flow target of over $2.2 billion from 2026 to 2028.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.11 for the quarter, based on a survey of 6 analysts. CooperCompanies reported an actual non-GAAP EPS. How significant is this beat?
Beating the EPS forecast by 4 cents is a positive sign, especially in a challenging economic environment. It demonstrates CooperCompanies' ability to manage costs effectively and deliver consistent earnings growth. This marks their 8th consecutive quarter of earnings beats, which is a testament to their disciplined execution and strategic focus.
Key takeaways. In summary, CooperCompanies has delivered a strong performance in the fourth quarter and full year 2025, with solid revenue growth and an EPS beat. Their strategic initiatives and shareholder return programs position them well for the future. John, any final thoughts?
CooperCompanies is on a solid growth trajectory with a strong focus on operational efficiencies and shareholder returns. Their guidance for 2026 is promising, and their continued investment in strategic initiatives should support long-term growth. It's a company to watch closely.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cooper Companies' performance in the comments below.